Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 26th of February, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual regular run through here today. We'll take a look at the calendar, both the earnings and macro calendar, see what we've had, see what we've got coming up, what are the important macroeconomic data points, earnings reports we're looking at. What are the geopolitical risks that we're seeing in the markets that are impacting markets? Central banks, looking at those as well. Looking at the major news wires. What are the headlines? Taking a quick look at the charts as well. So let's kick off with the macroeconomic calendar. Let's just, I'm going to just dupe this up and then go back to start off at yesterday. So yesterday, remember, we had the consumer confidence data. That came in, as you see here, slightly worse than expected. So reinforcing the negativity that we had from the prior data last week, the Michigan consumer sentiment data, and also the Walmart guidance. Again, obviously a reflection of the consumer. So all of those adding to the negatives from yesterday. If we go into today, looking at the macro data today, nothing really of significance in here. Oil data if you're trading oil, but other than that, Bostic is speaking at midday. Bostic at midday, that's going to be the main focus of today. So nothing really significant on the macro data. We did get consumer confidence data out of Germany this morning. You can see again a red in here, a miss on the consumer confidence data out of Germany. The big focus on the day is Nvidia after the bell. It's not till after the bell, after the closing bell. We get Nvidia today. Dubbed by Goldman Sachs the most important stock in the world right now, continues to be a market leader, an index leader, a sector leader, a global leader. So we're certainly keeping an eye on NVIDIA, and we could see some volatility on the major indices around those NVIDIA results. Let's take a look at the morning briefing Americas out of Bloomberg. So Trump to offer gold cards visas for $5 million in here. I don't think that's really going to impact us in here. We've got also Trump's tax reduction plans move a step closer to that as House Republicans pass the budget blueprint. So tax reduction plans in here going through, that's seen as a slight positive, and nothing else of really note in here at the moment. So nothing really going on at the moment in there that's going to impact us. Global stocks have actually had a slight rebound in here overnight. In here, Nvidia rising in the pre-market as well, ahead of the data that we're getting later today, the earnings data in here. European shares actually hitting record levels in here as a broader indices in here on strong results. Mining stocks particularly doing well in here this morning in here. So a new record high on the Euro Stoxx 600 this morning. Futures, as I said, up after Wall Street sell-off yesterday, and Trump's tax cut plans helping that. Trump opens door to new metal levy, though, with copper tariff price. So that's obviously a negative on that. And then also, again in here, same from Reuters, confidence saps stocks. So we're going down, but find foothold as Nvidia awaited. Apparently, Ukraine has agreed terms with on this minerals deal with the US. And Zelensky due apparently in the US this week on Friday. Keir Starmer, remember, is visiting on Thursday. Macron, it seems to go okay. There seems to be still some clouded information, I'm going to put it like that politely, from the various leaders about steps forward with respect to Russia and Ukraine, but we're certainly moving somewhere. But markets in here, obviously, at the moment, very, very concerned about potential heightened geopolitical risks and tensions. So if we look what's been happening, Nikkei little change down 0.25%, but a big rebound on China in here. Hang Seng shares up 3.25% on the overnight, really kind of doing their own thing at the moment, very independent from what we're seeing in Asia and very independent from what we're seeing on the global front as well. Excuse me. But European shares have had a bumper morning, really, having been on the downside. As you say there, the pan-European index hitting a new all-time high. FTSE's up 0.6. The DAX up German DAX up 1.5%, and the CAC up 1.2%. So significant rebound so far. And we go down to the futures and see notable rebounds. Not considering the setup that we've had since last Thursday, Friday. Nevertheless, we're up either side of 0.5%, just under 0.5% on the S&P, and 0.2% on the Nasdaq this morning. I'm going to waste no time going through the Fed Watch tool. Things are very, very static in here. At the moment, market pricing in kind of one rate cut coming maybe in the summer, June, July kind of time. Bonds though continue to fall in yield. Considerable sell-off again. Sorry, a considerable rally in bond prices. So a move lower in yields in here. So bonds rallying, potential geopolitical risk in here, seeing bonds going bid. And if we take a look at our bond market outlook in here, you'll see very bullish in here. So big breaks to the upside, taking out resistances right the way across the US futures in here. I currently got these on the March contract. We'll be rolling these to the June contract this evening. So you should be trading the June contracts now. But if we look at the US 30 years, 10 years, 5 years, massive breakouts to the upside in here. So this is more on safe haven buying really more than anything else, because it's certainly not to do with lower yields in anticipation of a more dovish Fed. So this is about the economy and safe haven buying of US bonds as opposed to the Fed, because the Fed Watch tool, the short end interest rate curve is not moving whatsoever in here. So we go out to the end of the year and we've still only got a 50% chance of slight increase in chance of maybe 2 rate cuts in here. Actually, there is a slight increase in here, moving towards maybe 2 rate cuts by the end of the year now. And so what else do I have for you though? So we've covered that. Stocks in here though looking very negative. Went lower again. We have had that intraday rebound. We'll take a look at it in the moment, but at the moment, you can only be negative going into Nvidia, but Nvidia could be a turnaround. And I said we have seen a bit of a turnaround. So we did undercut this low in here on the ES, this low in here from the beginning of February, undercut that just yesterday, and then rebounded into the close, and then rebounded slightly overnight in here. So if we go then to the 30-minute chart, you see that sell-off and rebound yesterday. So a sell-off and a rebound. So this could be the beginning of the end. I think though minimally on the ES, we need to get above really 60, 16, 17 kind of area to start to show that a base is going in. I think it needs to get above that kind of area really. So if we do get above that pre or post Nvidia, then that probably could see the base go in and see us to the upright. On the NASDAQ, it's a similar story. We actually held above this beginning of February low in here, just held above there. Less of a rebound though, but then higher again in here this morning, and we step into the 30-minute chart. So you see there's the sell-off and the rebound into the close and grinding higher overnight. I still think it needs to clear above this area, basically yesterday's highs in here. So above 21,460, 500 kind of area. Only above there does this start to look like a base and potentially got upside. Whilst below there, all the risk still remains to the downside. All right, guys, there's been a fairly whistle-stop tour in here. Not a huge amount to add to what we've been saying recently. We are getting a slight shift, as I said in here. You see that on the bond market, bonds rallying, lower yield, and a slight shift in this Fed Watch tool in here. A slight shift towards potentially a more aggressive. So you see, by July, we're still really now we've got 60% chance. 60 actually getting closer to 70% chance of a rate cut. There's some more chances of a rate cut, but by the end of the year, potential then for a second rate cut. So the market is shifting, and that's really though over concerns around the economy. That's why stocks are down in there. It's concerns over the economy that the Fed might be more dovish because of the policies that are going in are going to be either more inflationary or are going to cause a slowdown in the economy. So the reason the bonds are rallying is both for safe haven and also concerns around the economy. So it's not for positive reasons. So bonds are rallying, going to lower yields. And so then obviously stocks are actually down rather than up with this. All right, guys, I'm going to wrap it up there. So don't forget to going into today, midday, Bostik, and then after the bell, Nvidia. Have a great trading day. Bye.